Welcome to the show. How we doing?
Hey guys, doing well yourself?
We are
Doing
great.
great.
We're very excited to have you on. We've loved watching Superstate from afar. We were kind of talking internally before we were bringing you on of just like what we were excited about with the lineup we had today. Superstate is just such a serious player in the conversation around tokenization, and we've been itching to dive a little deeper here. So appreciate your time.
Well, I appreciate the love and support
Oh yeah.
from afar and now from very near. And I just wish you guys had given me the heads up to put the black collar on today because we've got the
Well,
Super State
it's
golf
not too
polo.
late. We could take a quick break. It's not
We
too
can
late.
take a quick intermission. Well, maybe Z, we'll have to put that in our notes that we put in the invites that if you want to master the aesthetic, here's the dress code.
Next time. Next time.
Next time. So Jim, you guys maybe as we kind of anchor this, as we've followed the business, there's continued to be more products that keep coming to market. We have like USTB with short duration US treasuries. We have FundOS, which we've seen and we're excited about. You have these really interesting deals that are coming to market with things like folks like Invesco. How do you, when you maybe even have an introductory call with a company that is evaluating Superstate, how do you position the firm from like a high level? Maybe we can kind of anchor what the company does in that way as we kick off.
Yeah, it's a great question. And it's certainly evolved over time with some of the announcements that you alluded to have definitely kind of shifted our public perception in the market in terms of what we actually do. And so if you had asked me when we first started the business, we're an on-chain asset manager. We're like building funds, tokenizing them, demonstrating that you can bring securities into DeFi. And really the intent behind that was to show that this can all work at scale with billions of dollars, hundreds to thousands of investors, multiple protocols, multiple chains. But where we stand at today is really where we had always designed the business to evolve towards, which is focusing on what we're great at, which is technology and connecting financial assets, particularly focused on funds and equities, to blockchains for reasons that make the issuer happy, make their investors happy, create secondary market use cases that are an improvement on the existing financial system. But really, at the end of the day, Superstate is a technology company that's connecting the world's assets to better systems and creating efficiency, utility, and scale across many different asset classes over time.
So the story of starting versus where you are today, maybe let's pick that timeline apart a little bit. Give us the evolution arc of how you made, like where you perhaps started and then how you've evolved to bring more of a suite of these tech products to market. And how that kind of organically or maybe non-organically came to be.
Yeah, it's a great. So maybe as a little bit of a earlier origin story for Superstate. So we founded the business after we spun out a Compound. So Robert Leshner is CEO of Superstate, and basically when he built Compound from the jump was basically like, how can we take smart contracts and allow people to manage risk and interact all around the globe? And the only assets that were compatible with those systems at that time were just Bitcoin, ETH, or maybe wrap Bitcoin on Ethereum, and a bunch of other types of tokens, even before stablecoins became as large as they are today. And so the vision that he always had for like, what can a decentralized financial ecosystem look like was always towards the goal of bringing traditional securities into those markets. So when we started out at Superstate, we are like, okay, let's go find the most boring conservative asset on the planet, which is a treasury. And like, let's bring it into DeFi because it has yield and it's extremely stable and it's a really fantastic building block for all of finance, but also for on-chain finance. So USTB was our flagship fund. And if you do the math, 3 years ago when we started the business, it was prior to the most recent election. So regulatory regime in the US was definitely not conducive of really opening the floodgates for tokenization. We're in a
Yeah.
very markedly different environment now than we were at that time. So we started it as a private fund. We got it to, over $1 billion, hundreds of investors, very diverse types of clients. And the evolution for us was, okay, we've gotten this product to a scale that has demonstrated stability. It's, passed all of its audits. It's integrated into Aave. It's on multiple blockchains. It is extremely, extremely robust. And so we actually went through a process towards the end of last year to go talk to large asset managers who are all saying, "Oh, we want to build something similar." And we said, "Hey, why don't you
Mm.
not? And why don't you instead go take over USTB as the portfolio manager for this fund, and we'll focus on technology while they focus on what they're really good at, which is managing assets." So Invesco is taking over USTB literally in 4 or 5 days next week as the manager of that fund, where we continue to manage all of the technology, the onboarding, tokens, whitelisting, so on and so forth. And so we get to combine forces on like our respective areas of interest and focus and expertise. And it then opens up the floodgates for USTB's one token. Invesco has $2.3 trillion of assets under management across hundreds of different products. So how can we work with them and other managers to then go expand into other asset classes, not just T-bills, but high yield fixing or private credit or other asset classes that have demand on chain. And so we've done the same thing with our other fund with Bitwise, taking that over. And FundOS is the kind of like unveiling of us not being an asset manager competing with Invesco, but actually being a partner helping magnify their ability to create really cool products. And the first external manager coming on that platform was actually Coinbase. So Coinbase Asset Management, their stablecoin high yield fund, is going to be tokenized through Superstate, and there's a whole slew of others that you guys should pay attention to for the next few weeks. Using that platform, to tap into these markets that we've demonstrated ourselves are extremely robust and can scale.
I'm trying to think through FundOS. Are we talking about bringing net new, like just going out and creating net new products with FundOS? Is this going to the legacy fund managers and saying, hey, bring your product on chain? Or is it kind of a blend where it's like, hey, bring your fund on chain so we can make net new primitives?
It's actually both underneath. So FundOS kind of breaks down into two categories. The way I think about it, when we talk to clients, it's like we have this turnkey product, right? So we basically have shown that we can create funds, USTB and USCC, with all of the like different pieces of what make a fund possible. So custody, audit, fund accounting, like those are necessary building blocks for a fund. And so we do that, for our clients that don't want to or don't have an existing product, that they can just use our platform to basically, create a fund from scratch, as turnkey as it gets. So they create the strategy, we do all the rest for them. They deploy the capital, we take care of technology. The other aspect is actually embedding ourselves into existing products. So there are ETFs, mutual funds, and other types of structures that already exist that have, hundreds of millions of billions of dollars in it. And we can plug directly into those as a either new share class or as a enhanced feature of an existing product, so that QQQ eventually will have a tokenized version of it directly through Superstate, basically, right? Where
Wow.
there's native exposure to or ownership of that asset without needing to have like a separate wrapper or other product to get the same thing.
So,
Can
and
you-
then go ahead, Drew.
I want to take a moment to like ground the world in how the gravity of what this actually means at scale. Like what is currently happening today with USDB and some of these the existing momentum, but to do what you're saying with Invesco and given the business that they're in and the history of that business and the scale of that business, like would love, Jim, from your vantage point, what that actually means from a business standpoint and scale standpoint. Because it seems like you're entering this new chapter that seems extremely scalable, but we're still actively in this moment, like going through that right now. For those who aren't familiar with Invesco or less familiar with the importance of that business, ground us a little bit in the importance of them.
Yeah, and maybe from a domestic lens, their ads are all over the TV. So if you ever hear of QQQ, that's Invesco's Nasdaq 100 product, and so very famous for that. Very large. I think it's 400 billion in AUM. So it's a very, very highly used product. In TradFi, it's like giving you exposure, like a bunch of the AI names and companies in the Nasdaq 100. The overall business has 2 trillion in it. And if you look at Superstate across the managers outside of Invesco, there's, and I can't disclose all of the names, but there's 10 trillion total in client base that are, plugging into Superstate, that have, very large existing businesses that are realizing that it's existential actually for them, that if they don't collaborate with a company like Superstate to tokenize their assets, to reach new investors, to create, markets, to be able to be stablecoin compatible. You had it up on the screen there. Like imagine you didn't take dollars over the internet. That would be a big miss. So I think they're all realizing, like we were with Invesco last week, it was like a 6-hour session, and like their global head of product came in. It was like, we got all of this done so quickly because we wanted to learn how to do it from the best. And then we need to then figure out how to scale this across a bunch of other aspects of our business, because there's so much that this does for them in-house from a middle office, back office perspective, that our technology can upgrade their existing systems, but it also then creates new demand vectors that they're missing out on. So you think about ROI, it's like net increased sales over lower costs. Like who wouldn't want that in their business? Like that's what tokenization does very fundamentally for folks.
How much in these conversations, and especially in the past like few years, tokenization, I'm sure they've probably like been hearing it. I'm sure at times it was even probably like a buzzword, trigger word for them. Is there like a specific moment where you could just see the tide shift, where they were just kind of like, okay, wait, I have to come to terms and I have to face, rather like I can't fight it anymore. It's coming. And then you kind of see them just like let their guard down. Have you had any kind of moments like that?
Yeah, I mean, capitulation, I would say, is probably a good term here. When we started the business, there were folks that were like, oh, tokenization, no interest, because when we launched our money market fund, we wanted to partner with TradFi folks, and it was just,
Yeah.
too early days. They were still trying to get their heads around what that all means. But the turning point, I think, was partly the election, but also Genius, where folks realized that and I think an even further inflection point will be when Clarity gets passed, which basically is just more law codifying that people can build regulated products and not get crucified like that. When you think about a risk manager at an institution like an Invesco, they're extremely risk off because they have a massive franchise to protect. Whereas now, like that has de-risked a ton. And, it's partly because of regulatory, but it's also like credit to Securitize and BlackRock and to Superstate and, other folks that have gone out there and said, you know what, let's partner with big asset managers, get these things to scale. Wisdom Tree has a massive array of different funds that are fully registered. So there's folks that have been demonstrating that this is possible and have also built enough credibility in the industry for the last, few years, that to me has been the like subtle inflection point, where if this was a prior cycle and we didn't have these confluence of factors happening, I think people would be less bullish. Right now, despite where prices are in crypto, like none of these firms care at all. They're realizing that the infrastructure is real and that it has to be a part of like literally every product that they issue today. And it's going to take time to get there. So, 2.2 trillion from Invesco is not going to come on chain tomorrow. It's just like not going to happen. But the momentum is definitely carrying people towards, the next decade for this to be, a total rewiring of everything that they do.
Really cool. I'd love to dive into, just for a few minutes here, the relationship with CBAM and Anthony's team, Coinbase Asset Management. It looks like this was announced almost a month ago now. I would love to highlight, like, one, just what that relationship is, how it came to be, and sort of the structure of it. I'd imagine that there are, if we can unpack how this relationship operates or the structure, we can actually start thinking more about replicating this and bringing this type of, I'd imagine, structure to other asset managers. So bring us into this relationship with Anthony's team.
Yeah, big fans of their team, really honored to be selected by them to help power the tokenization of this really important flagship fund that they're bringing to market. So it's called Cushy, which, Anthony's going to butcher me, but it's basically the Coinbase, there you go, stablecoin yield fund. I thought there was a U in there somewhere, but maybe it used to say US. They are managing a portfolio of diversified credit strategies, which are entirely based off of stablecoins. So forget that. They're basically generating yield in this fund. And highly sophisticated risk management, portfolio management, team over there run by the Coinbase Asset Management folks that are going to deploy all the capital in this fund. what they've selected to do is have two share classes. One is just a very TradFi share class. They think that this fund, and I agree with them, is actually extremely attractive towards like a family office that doesn't care about tokenization. They just want high yield. And this is a alternative private credit strategy for them. But then there's also a cohort of a lot of investors that want to actually hold the shares as tokens because then they can use them as collateral in Aave and borrow stablecoins against it and buy more cushy. And so you get this like staked ETH loop trade, but instead of the collateral being, LST, it's actually the fund, your shares in this fund, which
Well,
if you're in TradFi and you allocate towards a fund, it just like sits there on a website. You like open it up once a month and you see the statement and you're like, cool, maybe I should keep my money or add more, or I should, divest from this. It's a static screenshot basically that just shows you where your assets are versus being a dynamic asset. So when you tokenize these shares, it's still the same fundamental ownership. Literally nothing changes. I still own 100 shares of this fund generating 9.5% yield. Great. I'm happy with that. But now let's imagine that I want to go like buy some Bitcoin because I think it's about to rip from here, or you know what? I like that exposure, but I actually want to gear my return to get a higher yield. And so I can go tokenize my shares, go to Aave, post it as collateral, borrow USDC, and then either buy Bitcoin or buy more cushy. And you have this, utility of an asset that otherwise would have just stuck on a screen to now be more dynamic. And we've proven that. The reason why they chose us is if you look at Aave Horizon today, which is the RWA market specific to Aave. Similar, Camino has a Superstate market, Morpho has a USCC market. These are secondary applications that Superstate connects issuers to through ourselves first and now our FundOS platform, so that the investors in those products get a better opportunity and experience that they wouldn't have if it wasn't tokenized. So this is the holy grail of tokenization, is not just to say, cool, there's a ERC20 Ethereum. It's actually doing stuff in it. And so, yeah,
On
qualified purchase.
this is specifically from Aave's Horizon. We haven't reviewed this, but let me know if this is helpful as like a visual as you're talking about this specifically.
Yeah, exactly. So, folks are supplying liquidity in the form of stablecoins. So whether it's USDC, RLUSD, or Go, I think are the three stablecoins permitted. There's various markets where, people that own, so the top left corner where it says supplies, think of you being a shareholder in Cushy. So as I described, you now have a token in your wallet that you go then put it into this pool, and you can borrow that USDC or RLUSD that was provided by the liquidity providers. And so let's say I have $10 million that I own in that fund. I can borrow 80% maybe. And so I can borrow $8 million. I can go use that to invest in a house. I can buy Bitcoin or ETH. I can buy more cushy. And then I can go back to this market if I bought more cushy, supply it, and then do like a levered loop trade. That is very popular using these systems. So the fact that the asset is tokenized means that in that orange grid in the middle there, it's compatible with that pool versus it not being tokenized and it's not compatible and it just sits there in a, dusty way.
The idea,
so
I don't know if I'm alone in this, Zach, but like the idea of tokenizing equities and stocks and then being able to just think of them as like active assets. I think most
yeah,
people, I mean, I'm coming from a retail standpoint, obviously, but I think most people are thinking of, oh, I'm going to go buy this stock and then that's just going to sit there, like you're saying, and it's going to be something that, for me, I'm more of like a long-term hold kind of person. Like it's not an active thing that I can then go get liquidity out of or go do things with. It's like the idea of, at least I think what now people are starting to realize with what you can do with Morpho on Coinbase with Bitcoin or something like this, where you can, hey, I have this asset, I own it, I can retain custody of it, but then actually create liquidity for myself without selling it. Like that is a really, really powerful mental unlock for someone who has historically just looked at these things as like static buy,
yeah.
hold, open the account 30 years later kind of things versus, yeah, like collateral. I don't know if you're starting to see, Jim, the kind of psychology transformation of that in this moment, but it feels like we're entering that, which seems like a whole new paradigm for people.
Yes. So I'm glad you brought that up. And it maybe is something to leave the audience with to think about. Imagine you're holding NVIDIA for the next 30 years because you're like, that thing is just never going to stop going up. And I just want to be a long-term shareholder. But then you like life comes up and like, you got to you got to do a down payment for a house or
Yeah.
whatever. If you sell that NVIDIA, you're going to get hit with capital gains taxes, right? And so that'll take out
Mm.
some of your return versus being able to borrow at like, if you have the option to borrow against that from a DeFi protocol at like a 3 handle in terms of your borrow cost, that's actually cheaper than a mortgage today in the US, right? 30-year mortgages
Yeah.
are like 6, 7, 8%. And they're only going up because, rates keep going up. Now, DeFi is not always going to be at a 3 handle, but like you have the optionality because these are your assets. You should be able to take custody of them and be able to have the autonomy to be able to source better economics that aren't currently available. The other point that I'll make, which I think is very underappreciated by the market, and I tweeted about this last week, is like imagine that you're, again, holding NVIDIA for 30 years. And instead of the broker that's holding custody of your asset for you, lending that out to somebody else, like maybe there's a hedge fund that wants to short NVIDIA and they're borrowing that stock through your broker, really is your asset. That broker's keeping 99% of the economics, if not 100. And so let's say that they're taking your NVIDIA $10 million that you hold and they're lending that out at 30%. That's a clean $3 million a year that they're getting on somebody who's borrowing that NVIDIA from your asset. And guess what? You're getting zero of that. Now flip it on its head. If you have the tokenized version of that and you could go into Aave and you could lend that out at 30% and take that yourself, that's a nice little free dividend that's coming back to
Yeah.
you.
I think I found it. Just the one.
Yeah, exactly. Like my 14 likes, great. My mom must have hit the smash like button like 14
Hey man,
times.
1200. You can't, nothing to be ashamed of. So if you're a long-term shareholder but receive limited economics from securities lending because your broker retains most of the yield, yeah, it's essentially putting control back to the person who has the control in the first place.
You should, right? I mean, like this is the whole thing about finance today is that these are your assets that intermediaries are basically taking advantage of free capital that's on their books because of the market structure and are getting, they're getting paid off of your balance sheet. It's like imagine somebody was like lending against my house. I'd be pissed. Or here's a better example for everybody. It's like imagine somebody did Airbnb at my house but didn't pay me any of the fee income that they're getting. And it's like I just show up and there's, 2 people when I come back from a trip that are just like sleeping in my bed and I'm not getting paid on that. And I didn't have any authority to like control that. Like that's what's happening in securities today.
Need to sit with that.
There's a few rabbit holes. That's a good thing to leave us with. I will say, Jim, I think we'll have to have you back on because we didn't even dive into opening bell, which I think is something on the opposite end of the spectrum that especially, I even think about like, okay, one day does Stable Dash tokenize our equity for our shareholders and those more practical use cases for the 300,000 small businesses and startups out there. So we'll leave that open-ended for next time, but we appreciate you coming on today.
Sounds great. Thank you guys.
Sounds like it's going to be a fun couple weeks of announcements too. So we'll be on the horizon. Let us know if there's anything we need to be aware of.
Will do. Keep you guys up. Thank you for the opportunity. It's great to spend some time together.
Yeah, man.
Thanks,
Great
Jim.
to finally have you on. Appreciate it.